name is Emilia Hani binti Abdul Halim. I'm going to present some part of MFRS 8 segment reporting. We start with company background. Media Prima Berhad is a Malaysian media company based in Petaling Jaya, Selangor. It is Malaysia's largest media and entertainment conglomerate with business interests in television, print, radio, out-of-home advertising, content creation, and digital media. The group operates 4 television channels, which are TV3, NTV7, 8TV, and TV9, and 5 radio stations, which are 8FM, Blue TFM, Fly FM, Hot FM, and Mode FM. Media Prima Berhad is also the owner of New Straits Times Press, Malaysia's largest newspaper publisher with 3 national news brands, which are New Straits Times, Berita Harian, and Harian Metro. Let's see a little bit of Media Prima history. The company was formed in 2003 out of the merger of Malaysia Resources Corporation Berhad (MRCB) Media Asset, namely System Television Malaysia Berhad, and the New Straits Times Press Malaysia Berhad, which the latter has since 1993. The group currently ranked 3rd in Malaysia in digital reach following the 2017 acquisition of REV Asia Holdings, one of the Southeast Asia leading digital media groups. In 2018, Media Prima became the #1 choice for mobile content ahead of Google and Facebook. The company vision is to be the leading digital first content and commerce company, while the company mission is to enrich life by informing, entertaining, and engaging across all media. The next part that we are going to talk is the management approach. The first one is the factor to consider having segment reporting. The first factor is the nature of business activities. Under nature of business activities, we have the nature of the product and services, the nature of the production processes, the type or class of customer for the product and services, the method used to distribute their product or provide the services, and if applicable, the nature of regulatory environment. In our case, Media Prima is a media-related business. The next one is existence of manager responsible for the activities. Each segment is controlled by the segment manager, who is responsible for ensuring the performance of the segment and making direct contact with the Chief of Operating Decision Maker or CODM. Media Prima is a large company, hence each of the segment will be monitored by the managing director and need to be reported to upper level management on regular basis. Last but not least, information presented to the board of directors. The Chief of Operating Decision Maker should refer to the report assessed by the Board of Directors as it contains reliable information regarding the overall performance of the entity. This will help to know about the company performance, and decision will then be made wisely in terms of allocation and profit maximization. Also, under the management approach, there are types of segment. Media Prima has one operating segment, which is the business segment. A business segment is a unit of the entity that is engaged in providing products and services to consumers. It is distinguishable component of entity that is engaged in providing product or services. The core business run by Media Prima is television networks, radio networks, outdoor media, print media, digital media, content creation, and home shopping. Now, we are going to talk about Chief of Decision Making or CODM and its responsibility. The term Chief Operating Decision Maker identifies a function, not necessarily a manager with specific title. That function is to allocate resources to and assess the performance of the operating segment of an entity. CODM of Media Prima is the board of directors and the senior management. As we can see, these are the list of Chief Operating Decision Making in the Media Prima, starting with the highest position on the board of directors, which is Datuk Seri Dr. Syed Hussein Al-Junid, while the highest position on the senior management side is Rafiq Razali, which is also a group managing director. Here are the responsibilities of CODM. The first one is to make a decision on the allocation of resources based on the performance to ensure the company obtain more profit. The next one is to regularly review the operating result on both sets of components and financial information. Other than that, CODM has to assess the performance of wide various segments. Last but not least, CODM relies primarily on the net interest revenue to assess the performance of the segment and make decisions about resources to be allocated to the segment.
Assalamualaikum and hi! My name is Nur Farhana binti Muhammad Zari and I will explain on Segmental report under MFRS 8 for Media Prima Berhad. There are two ways to identify the reportable and non-reportable segments, which are 10% threshold test and 75% test. For 10% test, there are three bases that we can use. The first one is revenue basis. It reports revenues from sales to external customer and inter-segment revenue. The second one is profit or loss basis. The amount of segments reported profit or loss will be compared with the profit or loss of all the segments. And the third one is the asset basis. The total of segment asset will be compared with total assets of all the segments. We can choose one of these three bases to make 10% test. If we get 10% or more, it will be classified as reportable segments. However, if we get less than 10%, it will be classified as non-reportable segments. The second way is 75% test. Media Prima should ensure that total external revenue attributable to the reportable segment is at least 75% of total revenue. If the 75% is not met, additional reportable segment should be identified until at least 75% is reached. Next, let's see total external and inter-segment revenue from the annual report of Media Prima Berhad for the year ended 2019. There are 7 operating segments, which are television networks, radio networks, outdoor media, print media, content creation, digital media, and home shopping. For the year assessment of 2019, the total revenue is 1,208,120 ringgit. Next, 10% threshold test. For this test, I will use revenue basis. To calculate 10% test, we have to plus external revenue and inter-segment revenue of each segment. Then, divide it with total revenue of all the segments. After that, times with 100%. After 10% test for Media Prima, I found that there are 4 reportable segments, which are television networks, outdoor media, print media, and home shopping. While the other 3 segments, which are radio network, content creation, and digital media, are non-reportable segments. Next, let's do 75% test. As we can see at the previous slide, there are 4 reportable segments, which are television networks, outdoor media, print media, and home shopping. To do 75% test, we have to add all of the external revenue of these 4 reportable segments. We will get 996,125 of total external revenue. This amount will be divided with total revenue of all the segments and we will get 82.45%. That means total external revenue attributable to reportable segment of Media Prima exceeds 75% of external revenue. Hence, we don't have to identify additional reportable segments since 75% have met. After make 10% and 75% test, the new segmental report can be produced, reproducing 4 reportable segments and 1 non-reportable segment. The 4 reportable segments are television networks, outdoor media, print media, and home shopping, whereas the other 3 non-reportable segments are combined and disclosed under the other segment, since it does not satisfy 10% or more. Hence, the adjustment of operating segment by both tests are important to prepare the segmental report.
So now, we have come to end of segmental reporting. Like the other thing in the world, segmental reporting also have their pros and cons. Ever is a benefit to a group of people, it also may have not be a benefit to a group of people. So here are the advantage and disadvantage of segment reporting. We go through the advantage of segment reporting first. The first advantage is separating profitable segment. The key advantage of segment reporting is transparency. For businesses that operate in different categories or geographic areas, Segment reporting can reveal which areas are profitable and which are drains on the bottom line. If segment reporting show a business its overseas operations are more profitable than domestic operations, it could prompt a change in strategic direction. Done properly, it keeps managers from hiding unprofitable ventures. The other advantage is improved context. Segment reporting also allows stakeholders to get a better sense of fluctuation that may affect overall numbers. If a business report much higher earnings than expected, for example, segment reporting shows where those earnings are coming from. A stakeholder can look at the same report to determine if the numbers are sustainable. It's designed to help investors better understand the business and its potential cash flow. Now, we move to disadvantage of segment reporting. The first disadvantage is data manipulation. Segment reporting lends itself to data manipulation if the information is reported in the true management eye style. This gives company leaders more discretion in how it determines how segments are constructed and what metrics are reported. Managers may group together business with different business models. It can also cherry-pick metrics to send the desired message to stakeholders. Another disadvantage is placing a strong emphasis on the present. Segment reporting can place too much focus on short-term numbers. The company report their segment using short-term data and neglects the long-term figures, although knowing that this can give a long-term impact on their business.
Generally, the basis of preparation of the interim report can be divided into two, which is interim method and discrete method. An interim method is part of annual and it is a fraction of an annual report. It is formulated by annual values multiplied by fraction of the reporting period. Meanwhile, the discrete method is usually for interim report, where the interim period is separated period or self-standing. Besides, the report also prepared based on periodic basis. Media Prima use a discrete method, which is the unaudited interim financial statements have been prepared in accordance with MFRS 134. Interim financial reporting and paragraph 922 of listing requirement of Bursa Malaysia Securities Berhad. The accounting policies used by Media Prima in preparing the interim reporting is a lease. A contract contains a lease if it conveys the right to control, to use of an identified assets for a period of time in exchange for consideration. These are recognized as the right of use of asset and the corresponding liability at the date on which the leased asset is available for use by the group and the company. In determining the lease term, the group and company consider all facts and circumstances that create an economic incentive to exercise an extension option or not to exercise a termination option are only included in the lease term if the lease is reasonably certain to be extended or not to be terminated. Next, Media Prima also use investment property as their accounting policy. Investment properties comprise principally land and building held for long-term rental yields or for capital appreciation or both, and are not occupied by the group and company. The investment properties are depreciated on the straight-line basis to allocate the cost to their residual values over the estimated useful values. Media Prima measured their investment properties at cost less accumulated depreciation and accumulated impairment loss. There are 5 types of interim report prepared by the company, by the Media Prima. 1. Statement of profit or loss and other comprehensive income. 2. Statement of financial position. 3. Statement of changes in equity. 4. Statement of cash flow. And 5. Notes to the financial statement.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Farhashira binti Muhammad Fauzi. So in this slide, I'm going to present a period for the current and comparative of each statement prepared by the company and adjustment made by the company to be included in the interim report. So for the first slide, I will present about the period for the current and comparative of each statement. For the first statement, which is the statement of profit or loss and other comprehensive income, The current period of the fourth quarter was prepared from the 1st of October until 31st of December 2019, and cumulative period started at 1st of January until 31st of December 2019. For the comparative period of this statement, for the current period was prepared from the 1st of October until 31st of December 2018, and for the cumulative period started at 1st of January until 31st of December 2018. Next is the statement of financial position. For the current period, it was prepared from the 1st of January until 31st of December 2019, and for the comparative period started at 1st of January until 31st of December 2018. For the current period, the statement of changes in equity was prepared from January 1st to December 31st of 2019, and for the comparative period, it was combined from January 1st to December 31st of 2018. Lastly, statement of cash flows for the current period, it was prepared from 1st of January until 31st of December 2019, and for the comparative period started at 1st of January until 31st of December 2018. For the next slide, I will present an adjustment. There are two adjustments made by the company, which are inventories and depreciation. In this slide shows the financial statement before adjustment. Media Prima Berhad prepared its quarterly financial statement by MFRS 134 interim reporting and its interim financial years end on 31st December. On 31st December 2019, the amount of property, plant and equipment (PPE) is Rm 2510372. The accumulated depreciation is Rm 1870925, and the carry amount of PPE is Rm 639447. And for the current asset, which is inventory, is amounting at Rm 6,443,000. Meanwhile, on 31st December 2018, the amount of property, plant and equipment is Rm 2672436. The accumulated depreciation is Rm 1839375, and the carry amount of PPE is Rm 833061. And lastly, the current asset, which are inventory, is amounting at Rm 36,900,000. For the first adjustment, which is inventories, Media Prima Berhad had an ending inventories of Rm 6,433,000 in January 2019. The company had 6,500,000 units in inventory at RM1.50 per unit on December 31st, 2019. Every year, the cost of inventory changes. The inventory net realizable value as of 31st December 2019 is Rm 1.20 per unit. As of 31st December 2019, the projected net realizable value of the inventory is Rm2. The cost of Media Prima Berhad inventory would be realized at its net realizable value of Rm 7,800,000 on 31st December 2019. A loss of inventory amounting Rm 1,950,000 should be recorded in the statement of profit or loss. For the second adjustment, which is depreciation, all of Media Prima Berhad plant, property and equipment (PPE) are depreciated on a straight line basis over the asset projected useful life of 50 years. PPE for Media Prima Berhad cost Rm 2510372 billion on 1st January 2019, with a total depreciation Rm 1870925 billion as of that date. Media Prima Berhad decided to sell one of the building with a carry value of Rm 600 billion on October 1st, 2019. The building was purchased for Rm 540 billion by the company. On October 30, 2019, Media Prima Berhad decided to purchase Rm 800 billion new warehouse. Lastly, this is a financial statement after the adjustment has been made by the company. First, for the non-current asset, the cost of PPE on current interim is amounting Rm 2710372 billion minus accumulated depreciation amount Rm 1279959.573, and the carry amount for PPE is Rm 1430412.472. And for the current asset inventory amounting at Rm 7,800,000. Meanwhile, on the comparative period, the PPE is amounting at Rm 2672436 billion minus accumulated depreciation amount Rm 1839375 billion, and the current amount for PPE is Rm 433061, and for the current asset inventory amounting at Rm 6,433,000. And that's all from me. Thank you.